Interest rates are too high, so I'm going to rent. Let's talk. You know, in today's market, Michelle and I hear this exact statement at least 2 to 3 times a day. I'm not exaggerating. I have heard it no less than 6 times today already, and it's only 10:30 in the morning when I'm making this recording. But does it really make sense to not buy a home because rates are hovering around 6 or 7% right now? Let's examine the reasoning behind this and see. Let me start by saying, if you're in the market for a new home and you're able to buy, it truly is the perfect time to buy. While interest rates are higher than the last couple of years, they are still at historic lows. Buying a home could be a very smart financial move, especially if you plan on owning a home at least for 7 years, because you'll be able to take advantage of potential appreciation in the value of the property. One of the most significant advantages of buying a home, even at today's interest rates, is the appreciation of your home's value over time. This almost always greatly far outweighs the alternative choice of renting versus buying. And it becomes a huge difference over time also. While interest rates do have a direct impact on your monthly mortgage payment, your interest rate when you rent is 100%. So you're paying 100% for your housing with a zero return on your money compared to buying a home and paying slightly more in interest than you would in the past 2 years. For example, a $350,000 mortgage at a 5% interest rate would result in a monthly payment of about $1,878. Obviously, there's taxes and insurance and some other fees on that, but your mortgage payment would be $1,878 a month. At a rate of 6.875%, which is what I saw rates at about today, that mortgage goes up to $2,300 a month. That's roughly a difference of about $425 a month, $5,100 a year. So when you compare a mortgage for that house with a loan at 5%, it's compared to what they are today, it's really costing you about $5,000 a year more for the very same house. This is the reasoning that everyone I hear this comment from is using to make their decision to not buy a house and instead they want to rent. Okay, $5,000 in a year, it's a good amount of money compared to what you could have bought the same house for, 2 years ago. But is it a valid reason to not buy? Is it sound reasoning? To figure that out, we really should have a look at the rest of the story. As one of my all-time favorite broadcasters, Paul Harvey, used to say, by choosing to rent instead of buying, you're saying it makes more sense to pay for someone else's home to live in and get zero back for it. Most oftentimes, your rent will be at least as much as you were going to pay on a mortgage to buy it, and sometimes it's more. And in a few cases, you rent for a little less than what it would cost you to buy, but even if you do, it's not by much. Rent is usually based on market value, which so rental prices actually take into account in their market value the rise in interest rates because they're paying a mortgage typically on a house, and if they've recently bought the house, they're paying higher rates, and they refinance. Owners of investment properties refinance all the time to take equity out to go buy more properties. So the point is, the market for rentals already include rising interest rates in it. So you're not saving any money in rent by renting instead of buying, because rent rises over time. We know this. As interest rates go up, so will your rental price. Rent prices rarely fall. I've never heard anybody call me up and say, you know what, I've changed my mind, I'm not going to buy because they dropped my rent $1,000 a month. I've never heard that in 25 years of selling real estate. The point is the same. $2,300 a month that you could be putting towards your house to build equity over time, to own the house you live, and you're putting it towards paying for someone's house, paying for someone to build wealth for you. It's just someone else. It's just not yours. So you're still paying the same money to live in a house you have to live in anyway, but you don't get any of the benefits of it. Someone else gets those benefits. You are building wealth for your landlord 100%. And I don't know about you, but I'd rather build wealth for myself, since I work very hard, and I'm sure you do too, to take advantage of that equity and net worth in years down the road, as opposed to building that wealth for someone else. So instead of paying a little more monthly to buy your house, you're saying it's a smarter decision to pay for someone else's house instead and make them wealthier. Again, if you want to see those numbers, and they are big, huge numbers over 30, 40 years, go watch my rent versus buy video. You'll like it. I also hear this as a backup reason, a second reason why people don't want to buy now, is that interest rates are going to fall. Home prices are going to come down. Let's talk about that. First, let me tell you why you should at least hear me out. I've sold homes for the last 25 years. I have a bachelor's degree in finance from University of South Florida. I'm a former computer programmer. I also live my life in this business every single day. I love what I do, which is to help people buy, sell, and invest in real estate, and I do it every day. And last and most importantly, I invest in real estate personally. My wife and I own properties. We invest in real estate. Even at higher interest rates, we consider buying properties all the time and are making moves to do that very same thing. So I'm not just telling you to go out and do it. I live it. My wife and I live it every day. Interest rates are not expected to fall anytime soon. I'll say that again. Interest rates are not expected to fall anytime in the near future. Most likely they will stay, most experts predict that most likely they will stay anywhere between 6 and 8% for the next few years. Maybe 3, maybe 4, maybe 6, maybe 8 years. We don't know exactly. The further out we go, the harder it becomes to project anything in life, especially interest rates and markets and prices. But experts do generally agree on that one concept, that interest rates are not falling significantly anytime soon. Actually, they could even go up more and stay up higher for a longer period of time. Why? Well, there's a lot of economic factors that cause high interest rates to go up, to come down. But right now, a lot of those factors are indicating higher rates and sustained higher rates in the economy. Monetary policy and other things like inflation and consumer confidence and spending. There's so many things, and that's the topic of another video, maybe one that I'll do one day, but not here. Most economists, though, are predicting that we will not see interest rates below 5% possibly in our lifetime ever again. So interest rates will not fall dramatically or significantly anytime in the near future. As far as home prices coming down, yes, we had a correction that was badly needed in the middle of 2022, around June. Started in June, dropped significantly through the end of 2022. However, just at the new year, almost literally January 1st, it was like the 2nd or 3rd, prices basically flatline here in Central Florida. We do expect to see a slight drop, maybe 1, 2, 3%, depending on the market, a little more, a little less, by the end of 2023, but nothing earth-shattering. Most economists are predicting that in 2024, prices will start rising again at a more normal rate, which historically has been about 3 to 5% a year. So the short answer is we do not believe that prices are going to drop from where they are now very much at all over the next 12 months. Instead, they will most likely start rising at the beginning of next year. Now for the most important part, let's talk appreciation. No, not that kind of appreciation. But thank you. As long as you plan to hold on to the property for about 7 years or more, you may be able, and you should be able, to take advantage of potential appreciation in the value of your property. Over the long term, real estate has historically appreciated in value. And if you're able to hold on to your home for an extended period, you may be able to realize significant gains. While there are no guarantees when it comes to appreciation, historical data suggests that long-term real estate investments are profitable. In most 8-year periods of time throughout history going back, real estate outperforms almost every other investment vehicle out there. Just one last word, because a lot of people have this wait and buy mindset in the market right now. There is actually less competition in the market right now to get the house you want. So if you see houses you like and you're able to buy, even though you're paying slightly more for it, you're paying for your house, not someone else's, you have less competition to get that house than you have over the last 4 years. I know so many buyers who were in the market to buy houses, and we looked actively, and they lost out on so many offers. They just got tired and fatigued, dropped out of the market because of the competition. So even though they were able to buy and they wanted to, they couldn't. You have an opportunity to buy now because sellers are not getting multiple offers on properties for the most part. The beauty is sellers are actually starting to offer a few incentives for buyers. It's a more balanced market. So a lot of sellers are willing to offer closing costs, or even better, a 2-1 buy down scenario, which can take that interest rate down 2% your first year and down 1% the second year of your mortgage. So if rates do fall a point or two, you could be able to take advantage of the lower rate long term, and this will give you a little time to do that. Look for a video soon if you want to know more about the 2-1 buy down and how that can significantly affect your mortgage rate and being able to get you into a home. Or if you want an answer faster, give me a text, give me a ring, give me a call, shoot me up on the phone, hit me up on email, whatever you like to do, and we can talk sooner. Of course, in closing, buying a house is not without risk. It's important to carefully consider your personal financial situation before making any significant investment in a house. However, if you're in a stable financial position and plan to hold on to your home for the long term, now is an excellent time to buy.